Get what I'm saying here? We have a suspense account. A suspense account is created because the trial balance doesn't balance. So it starts with the trial balance. But it doesn't start with trial balance. It starts with the nominal ledger, where the business records all its transactions. So a business will do transaction. You buy, you sell, you have creditors, you have debtors, you purchase, you sold, whatever happens, they are all to be recorded. So they are recorded first in the general ledger, which is a nominal ledger. So from that nominal ledger, you prepare your trial balance to ensure that both the debit side and the credit side are balanced. Then you can go ahead to prepare your final account. But if the trial balance doesn't balance, it simply means there's an error. So before you now find out that error, whatever is the difference between the debit side and the credit side of the trial balance, you put it as a suspense. So a suspense account is created because the trial balance is not balanced. Do you understand what a suspense account is here? We create a suspense account because our trial balance did not balance. I think that is clear. So that takes us to what a trial balance is. So what's a trial balance? A trial balance is a list of all balances in the nominal ledger account. The nominal ledger is the general ledger where all your transactions are recorded as a business. So everything, goods that comes in, whatever transactions you do, they are recorded in the nominal ledger. So you use the nominal ledger to prepare your trial balance. Do you get what the trial balance is here now? Are you with me? Are you here? The trial balance is what? The list of all transactions from the nominal ledger. The nominal ledger is the same as the general ledger, where all the transactions of a business are recorded. That is why we have accounting. We have accounting because we need to record all our transactions. And that's the difference between business and accounting. Business, you exchange goods and services for money. But where do you record all this exchange? You record it through the accounting. So accounting allows you to record all your transactions. And that takes us to the trial balance. So a business will prepare its trial balance because it wants to prepare its final account. Because the final account is used to understand the expenses, the gains, the assets, and the liabilities of the business. So all the transactions you have done all through the year will be put in one place, which is the final account. But you cannot prepare the final account without preparing what? The trial balance. Do you get what I'm saying here? So a trial balance is what? A list of all balances in the nominal ledger. It is a worksheet used to confirm that the total debit equals to the total credits of a company's ledger account. So as soon as you prepare your trial balance, both the debit side and the credit side must give us the same figure. So if it gives us the same figure, then we can go ahead to prepare the final account. If not, then we have to open a suspense account until we find the error. Do you understand? Any question up to now? So I think we understand what a trial balance is here. It's a list of all balances from the nominal ledger.
So how to find the error?
The error. In accounting, we have different errors. We have some errors that affect the trial balance, and we have some errors that do not affect the trial balance. How do we find the errors? We go back to the suspense account. So the suspense account allows us to find the error. Do you understand? So the errors might be from sales. You have to check through your sales to see what figures is missing. The errors might be additional error. It might be missing items. So whatever the error is, you'll be able to know it after preparing the trial balance. You can't know if the business has made an error or not until you prepare the trial balance. Do you get it? So the errors you will detect the errors, but you cannot detect the errors without understanding the trial balance. The trial balance allows you to know if your transactions are accurate or not. So how to detect the errors, we'll talk about that later. Do you get it? Any questions about this? So for the trial balance, I said we have a debit side and what? The credit side of the trial balance. So there are debit side and credit side of a trial balance. So for the debit side of the trial balance, we have assets and expenses. Those are the two items in the debit side of the trial balance. Assets and expenses. When we talk about assets, we're talking about things that the business owns. Things you own as a business. the resources that belong to the business. They are recorded like what?
Like tables.
Land, building, furniture, all these things belongs to the business. So they are recorded on the debit side of the trial balance. Do you get that? And expenses, your spending, whatever the business spend on is also recorded on the debit side of the trial balance. Your expenses, you could buy a pen. It's an expense, you purchase it, right? So because it's an expense, yeah, you paid for it, but the money, the resources is coming to you. You debit the giver, the receiver, you credit the giver. So expenses and assets are part of the debit side of the trial balance. Do you get it? So the debit side is what? Assets and expenses. On the credit side of the trial balance, you have liabilities and gains, which can be income too. Income or revenue. Do you get it? The opposite of assets is liabilities, yes or no? Then the opposite of expenses is what? Income. So these are recorded on the debit side and these are recorded on the credit side. Other items that can be here is drawings. So we have drawings here. We have drawings on the debit side of the trial balance. Then we have capital on the credit side of the trial balance. What is drawings? What the owner of the business takes from the business. Drawings. And as soon as the owner of the business puts money into the business is what? Capital. Do you understand what I'm saying here? Capital is on the credit side of the trial balance. Drawing is on the debit side of your trial balance. Do we get that? So these are items that goes to either side of the trial balance. So we have a typical trial balance here. This is the format of a trial balance. So we have opening stock is considered as an asset. So it's going to be on the debit side. This is an asset on the debit side. So this is an asset. Let's put it this way. This is an asset. This is an asset. It's going to be on the debit side. This is asset. It's a current asset because it's expected to last for within a year. Furniture is also an asset. It stays on the debit side. Purchases, you bought goods. When you purchase, those goods stays with the business, yes or no? Despite the fact that you are paying, but those goods stays with the business. So it's also what? Is an asset. Machinery is an asset. Purchases returns. Some goods that you purchased, you are returning it back to whoever you bought it from. Maybe to the supplier. No, it's not a liability. You are giving out. You give it back. So money comes back to you. You purchase the product, that's an expenses. But now you are returning the product. As soon as you are returning the product, that means you get your money back, yes or no? So purchases return should be considered as what? An income or gain. Do you get what I'm saying or not? Purchases, you purchase, is an expenses. Purchases returns will be income because as soon as you return the goods, you will be credited for that amount. Money has to be returned to you. I bought this from you, I'm returning it back to you, you have to pay me back. You have to give me back the money.
So it's an
Income. So this is on the debit side. Let's use debit. Debit side. So this is going to be on the credit side. Yes or no?
Yeah.
Debtors. Who are your debtors? Your credit customers. Your credit customers are assets. Yes or no? So it's going to be what? On the debit side. Sales.
Yeah.
Sales, yes. It's a gain. You sold out. You give out. So it's going to be what? Credit. Do you understand? Your creditors are also what? On the credit side. Yes or no?
Yes.
Sales returns. What you sold to your customers, they are bringing it back to you. You received it. Debit side. Thank you. Bills receivable. It's debit because bills are assets to the business. They are more like stocks too. They belong to the business. So it is what? On the debit side. Then drawings. I told you about drawings already, right? On the debit side. Yes or no? Rent. Rent is an expenses. It's going to be on the debit side. Bills. Drawing. When the owner of the business takes money from the business, that's drawings. Whatever the owner of the business takes from the business is considered to be drawing. Whatever the business. What?
It's like withdrawals. No, it's different.
Withdrawal means you took. Withdrawals could be for anybody. Withdrawals could be for anybody. But here we're talking about an item. a list which is about drawing. So this item means the owner of the business has taken money from the business. So when the owner of the money of the business puts money into the business, it's capital. But taking money from the business or stocks from the business is considered as drawing. So how is drawing? Why is drawing on the debit side? It's on the debit side because now you are paying part of your debt. As soon as the owner of the business puts money into the business, it means the business is owing the owner of the business. But as soon as the owner of the business is taking part of the money from the business, it's drawings. It means the owner of the business is owing the business. So it's an asset for the business. Do you get it? Do you understand or not? Are you here? Okay, great. Then we have bills payable. Bills payable you have to pay. That is on the credit side. Salaries and expenses on the debit side. Cash is an asset, short or non-current assets on the debit side. Advertisement is an expenses on the debit side. Bank overdraft is a liability. You took more than what you have in your bank account. Stop right when I'm talking. Stop right. A bank overdraft means you have taken more than what you have in your bank account. It's a liability. It's on the credit side. Commission received. You receive commission. Commission simply means you receive certain amount from whatever you have sold. Oh, sell this laptop. As soon as you're able to sell this laptop, I'm giving you 10% on it. Do you understand? That's income, yes or no? Do you get commission here? So commission is what? Is it debit or credit?
Debit. Credit.
Credit. Because it's an income. Interest on overdraft. You took an overdraft from the bank. That means you took more than what you have from the bank account.
So it's credit and debit. No, debit.
Interest on overdraft.
Debit.
Why is it a debit?
Because you like the bank owns you now.
No.
The bank didn't-
What is an interest? What is an interest?
Interest, like you take income, not income, like
The amount of buying money.
yeah.
Interest is the cost of borrowing or the benefit of money. Or we call it the price of money. So interest is the price of money. Do you understand? So if you have taken a loan, an overdraft from the bank, it simply means you have to pay an interest to the bank. Paying an interest to the bank means an expense for you. So that is why interest on overdraft is what? On the debit side. It's an expenses. It's an expenses. Overdraft is a liability. Overdraft is what? A liability. Overdraft. A bank overdraft is a liability. It's on the credit side. But interest you pay on the overdraft is an expenses. So it's going to be on the debit side. Do you get that?
Interest
Interest on overdraft. So an interest is what? The price of money, which is the cost of borrowing or the benefit of saving. Do you understand what interest is here? Then we have discount. Discount is on the credit side of the trial balance. Discount, yes. Because discount is considered, no, discount received here now. Discount received. When you receive discount, it means income for you. When it is discount allowed, it's an expenses. When you give discounts to your customers, you pay. So that's an expenses. But when you receive discounts, it means it adds up to you. It's a gain. Do you understand? And capital, I told you about capital already. Is on the credit side. The opposite of capital is what? Drawings. So if drawing is on the debit side, capital will be on the credit side. Because capital means additional money has been added to the business. Do we get it? Any question about that? So the trial balance is prepared before the final account. So this is where we are going. The final account. The final account comprises the trading profit and loss account and the balance sheet. So here, assets and liabilities. Yeah, okay. Assets and liabilities are entered in the balance sheet. Then expenses and gains are entered in the trading profit and loss account. So this is what we're talking about here. Assets and liabilities, they go into your balance sheet. Expenses and gains, they go into your trading profit loss account. And for drawings and capital, they are part of the balance sheet. Do you get it or not? We use our trial balance. As soon as our trial balance is balanced, we prepare a final account. The final account comprises the trading account, the profit and loss account, and the balance sheet, which is the financial statement. We have the financial statement, which is the statement of financial position, and the statement of profit or loss account. But how do we prepare these accounts? We prepare them through the balance sheet. So if the balance sheet is balanced, then we can prepare the final account. So what are those things in the final account? Assets and liability in the balance sheet, expenses and gains in the profit and loss account, drawings and capital in the balance sheet. So in the next class, we're going to start preparing the final account. But mostly we're going to try, we'll prepare a trial balance first before we prepare the balance sheet or the final account. Any question?